Right. Today, I want to do a deep dive into Adobe, right? So for those that are still new to the US stock market, its ticker symbol is ADBA, right? And it's in the digital marketing software business. As for industry, it's a software and IT services industry. So what happened to Adobe recently? Let's have an overall overview, okay? Now, Adobe stock experienced a significant decline of 15% following the release of its Q4 results for fiscal year 2024. This drop led the stock to hit a 52-week low, bottoming at 433.02. So the question now beckons, is this the beginning of a downtrend for Adobe? Let's analyze its Q4 performance and valuation to gain a clearer perspective. Okay, so let's look first at the Q4 fiscal 2024 results. Now, Adobe reported solid revenue growth in Q4, with revenues rising 11% year over year to 5.6 billion, slightly exceeding analysts' expectation of 5.5 billion. The company saw a 13% year-on-year increase in digital media segment sales, a 17% year-on-year increase in document cloud sales. This growth was driven by a strategic migration of customers to higher price subscription models, resulting in an increase in average revenue per customer. So in addition, Adobe's financial health remains strong. If you look at the chart right here, right, net revenue and net profit shows consistent year-on-year growth. As you can see here, the net income and net revenue, it's on an upwards trajectory, including 2024 as well, right? Now, if you were to look into the other areas, important areas like free cash flow, it's also increasing steadily. We can see the yellow bars here, they're increasing as well, right? Return on equity at 36.84%. Return on invested capital at 23.74%. These are huge numbers and very, very important numbers. And this shows that this company is on very, very, notice how many varies I'm putting solid footing. Okay. So what happened? We had an overview that showed that Adobe stock has declined tremendously, 15% decline. So why did the stock decline despite earnings growth? The primary cause of this decline was its underwhelming fiscal 2025 guidance. Adobe's projections for fiscal year 2025 anticipate revenues between 23.3 billion and 23.55 billion, which is below the analyst consensus of 23.78 billion. This shortfall has raised investors' apprehensions about the company's growth trajectory. Now, despite significant investments in generative AI technologies, Adobe has not provided clear metrics on how these innovations will translate into revenue. The absence of explicit monetization strategies for AI products has led to investor discomfort and skepticism about the company's ability to capitalize on its AI advancements. Now, in response to Adobe's recent earnings report and future outlook, several analysts have downgraded the stock and reduced its price targets. For instance, TD Cowen downgraded Adobe from buy to hold and lowered the price target from 625 to 550, citing uncertainties in AI monetization and growth deceleration trends. So we need to check, this thing, yes, they have a negative guidance. But end of the day, is Adobe's economic moat under threat? If it's under threat, it's a different case, okay? The conclusion is the decline in future guidance does not indicate a threat to Adobe's economic moat. The company continues to maintain a strong competitive edge. And two of its strongest economic moat is, number one, Adobe software remains the industry standard. across multiple sectors, granting it significant pricing power. It's an industry leader right now. And number two, high switching costs. The seamless integration of Adobe software suite creates a strong lock-in effect, as migrating to competitors would involve significant adaptation, time, and effort. You know, all people who actually went to learn how to use Adobe softwares took years to master them. And it's not something easy that if you want to switch, you just switch like that. Okay, it takes time to learn this, and it takes effort as well. And since they are already the industry standard already, what other competition can come in and just take it like that? It's not something that you've been trained. You know, you have seen how useful that operating system that is to you, and suddenly you want to change into something else. It's not as easy as it seems, even though it's expensive as well to maintain it, but it is even more expensive to change, put it that way. That's why we call it high switching cost, right? So apart from this, let's look into some historical context to understand, AI developments. How long does it take before you can make money from AI? Were there any companies that actually faced the same problem before? Okay, so adoption of disruption technologies by previous companies. Historically, companies that have invested heavily in emerging technologies often face initial skepticism and slower monetization before scaling. For example, Amazon and Microsoft face similar concerns with their early AI and cloud investments. But these technologies became major revenue drivers after strategic adjustments and market education. Adobe has successfully navigated similar transitions before, such as shifting from perpetual licenses to a subscription model for Creative Cloud, despite initial market hesitations. Second, monetization delays in AI. Now, many AI companies like OpenAI and NVIDIA face delays in realizing full monetization as they refine their business models and optimize their offerings. Adobe's AI tools like Firefly may require time to be seamlessly integrated into workflows that users are willing to pay premiums for. Okay, so other than the historical context, let's look into the current developments in AI companies. Number one, product differentiation. Successful AI companies like OpenAI, NVIDIA, and Google differentiate by offering unique value propositions such as specialized hardware, superior models, and tailored solutions. If Adobe can continue enhancing Firefly's capabilities and prove that its AI tools outperform competitors like Canva or generative AI startups, it can overcome competitive pressures. Other than that, ecosystem integration, companies like Microsoft have shown the value of embedding AI into existing ecosystems. Copilot into Office 365 is one of them. Now, Adobe is already doing this with its Creative Cloud suite, which provides a strong foundation for scaling AI adoptions, right? So, as a conclusion, while Adobe challenges with AI monetization and competitions are not trivial, historical patterns and current developments among AI companies suggest these problems are addressable. And I'm not worried. Furthermore, I've already said that its competitive mode remain rock solid. Okay, Adobe's strong brand, established user base, and proven adaptability places it in a good position to resolve these issues. So, based on analysis, the average intrinsic value for Adobe is approximately 510 per share. With the current market price around 447.94, this suggests a potential undervaluation of about 13.85%. So, from a technical perspective, right, 430 and 370 are possible support areas for Adobe, which you can look into. Okay. At the end of the day, make your own investment or trading decisions. But these are the areas that we think it's very good support areas that you can start looking into Adobe, especially since these prices are below its intrinsic value. Okay, so with that, that's the report for today. Thank you.